I'm going to look for a point of interest where I want price to come back to, right? So if I have a point of interest, let's say an order block, that's what we're going to focus on, the order block. Today we are going to be learning how I personally, when I was in the phase of struggling with very many concepts, trying to figure out what would work for me, how I was able to narrow down the space and stick to a very few things I had learned here and there and be able to gain a certain level of consistency. So one of the most popular strategies that you are going to find outside on the internet with very many mentors is definitely the smart money concepts, or SMC, right? Then we have heard of ICT, then trend lines, blah 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 blah. There is too much, right, on the media. But we are going to borrow a few concepts from just our basic price action, support, resistance, uptrend, downtrend, and yes, something or two from smart money concepts. And then we are going to build a strategy. So stay in the video till the end to see what our trade plan will look like. And trust me, come the market open this Monday, you will be able to see these same moves. So from our basic price action, we are going to borrow the concept of support and resistance, SNR, then structure, right? General structure. So what you need to know is what an uptrend looks like, a downtrend looks like, and support and resistance levels when you are trading. Now, how are we going to build them up? So the first thing I'm going to do, we are going to build our trade plan. We are going to build our trade plan. We are going to build a trade plan starting from scratch in today's strategy. So make sure you have a pen and paper where you can be able to write down a few notes and see how it comes out. So first and foremost, we shall look at structure. Then we are going to look at points of interest and eventually our entry model. So this is how we are going to lay down today's strategy. Now, what you need to know is what the structure look like. So by structure, basically what I mean is uptrends. We do have the consolidation or the ranging markets. That's a sideways movement. Then we do have the downtrend as well. So you might have come across videos in concepts like supply and demand, and they're telling you about a rally, a base, then a drop, right? Now in supply and demand, a rally basically means an uptrend. You're rallying, right? Then a base is a consolidation, right? Then a drop is a downtrend. That's for supply and demand as well. For the guys who have been able to look into those concepts as well, such don't get left out in today's strategy. So after knowing this, I need to know what is support. Now, as I told you in the previous video, support is basically a price flow, or we can call it a price flow, or a price level that is below where price finds difficulty going below. So price will always hover above that zone or the price level. That's our support level. So this over here, let me make it a bit more visible. This is our support level. Then the concept of resistance. Now what's resistance? Resistance is a price ceiling or a level above, or a price level above that price finds difficulty moving beyond, or moving to the upside, or rallying beyond. So when price comes to support, we anticipate that it's actually going to move back to the upside, and when price comes to a resistance level, we anticipate it's going to move down to the downside. Now we are going to use a few candlestick patterns, basically one which will be the engulfing pattern. So by an engulfing pattern, what I basically mean is that if this is our bearish candlestick, if this is my bearish candlestick, and then I get a bullish candlestick that comes and closes above this, including its wick. I'll turn this to blue for all the traditional green. And this is my bullish candlestick, and it closes above the wick of the bearish candlestick. That would be our wick. This becomes a bullish engulfing pattern. And for the bearish scenario, we do have a bullish candlestick. Then we have a bearish candlestick that comes and closes below the wick of the bullish candlestick. This will become our bearish engulfing pattern. This right over here. So we have looked at support and resistance, we have looked at the bullish and bearish engulfing patterns, and we have looked at the trends, the uptrend or the rally, the consolidation or the base, the downtrend or the drop as well. So Now we are going to apply a little bit of smart money concept ideas, right? Now, what smart money concept ideas are we going to look at to build up our trade plan? We are going to first and foremost look at the order block. The order block as a concept. Then we shall look at what we call a break of structure, and then an imbalance, or you could call it an inefficiency of price action. So some people would call it imbalance, other people inefficient price action. Then in ICT they would call it a fair value gap. It's pretty much the same thing. It's just the English. So we're going to borrow these. The break of structure is going to be very key. We can as well just stroke and say a market structure shift or a shift in state of delivery. Whatever, depends on how good you are with your English. It's just the same exact same thing. So this is what we are going to be focusing on, and this is how we are going to be building our trade plan and eventually entry. So make sure you subscribe and let's get right down to the strategy. So first and foremost, I want to determine what part of the trend I'm actually in, right? What part of the market we actually are in. So the market moves in basically three ways. That it either rallies, or it consolidates, or it can be in a downtrend, right? So how do I know that price has changed from one stage to another, or it's continuing with a specific stage? If I'm moving to the upside in an uptrend, or I'm rallying and I have a break of structure to the upside, because I'll focus on the breaks above over here. I won't just go through this. If you want to get a deeper understanding of market structure, the videos are in this same channel. You'll be able to review them and get a deeper understanding of market structure and how to read market structure. So I'll have a break to the upside and anticipate a retracement, then I can be able to continue with the trend upwards, right? Then if I'm in a consolidation like this and price tends to break below it, then I can anticipate that the consolidation has ended and we are going to wait for a retracement to retest, then we continue to the other direction or to the upper direction. So basically you want to determine what part of the trend you're in, and we are going to be looking for what we call breaks of structure. This is a break of structure. So what do we look for? So if I notice that I'm in an uptrend, let's start with the uptrend scenario. I'm going to come on my higher time frame, preferably a 4-hour time frame or a daily time frame. If I'm an intraday trader, and I'm going to look for what state we're in. So for this case, we are in a bullish scenario. So what will I notice? I am going to notice that we had a break of structure over here. This is a break of structure. Now, after noticing we have the break of structure, so let's anticipate that we are at this part in the market, right? Market came up, came down, and is at this level over here. So we had the move up, the move down, and we have had this break over here. This is where we have found the market. So you mark your break of structure right over here. Then we shall wait for this part to finally form a high, a fractal high. So in the previous videos, I have also been able to explain how we determine the fractal highs, and the fractal highs in particular, because what we focus on to know that this is a swing point or this is where we're reversing from. So, and I've noticed this now, I'm at this stage in the market. What will I look out for? I want to come and I'm going to mark this level to this level and determine their 50% level, which is this over here, right? So after determining the 50% level, that's my 50% level of this leg that broke structure to the upside, I'm going to come down on a time frame. I'm going to skip a time frame below. If this is a daily time frame, I'll skip the 4-hour, go to the 1-hour time frame. Then on that time frame, I'm going to look for an order block. An order block right over here. So what kind of order block am I looking for? I am looking for an order block with an imbalance or price inefficiency, right? Or an inefficiency over there, or a fair value gap. And I'm going to look for it on the next time frame, right? That's the 1-hour time frame. I'm going to be looking for that break of structure, for that order block. Then I will mark it out. So after marking it out, I am going to wait. Now I have seen my structure and I've seen it has been invalid by the break of structure. I'm waiting for this retracement lower to this order block. It can be here, it can be somewhere here, but basically I'm looking for an order block with an inefficiency or a fair value gap or an imbalance. That's the order block I'll take. If I find it here, that will be the order block. So basically remember, an order block is, if we're going upwards, it's the last down close candle, before the upward move that had an imbalance, right? Or that broke structure. So it can be anywhere within this leg, but it should be below the 50% level. So I'll mark that order block. Then again, I will skip a time frame to probably a 5 minutes. If I'm on a 1 hour, then I'm going to wait for what we call a confirmation. Now, our confirmation we're about to call a market structure shift. Now, remember, we are looking for this market structure shift on our last entry time frame. Now, by market structure shift, what I mean is that if price was going downwards on that time frame and it has entirely shifted and switching and it's now going upwards, that is a market structure shift. And we're going to look at how it looks like. So in ICT, we'll call this the smart money reversal, and in SMC as well. Or it could be a change of character or head and shoulder or Quasimodo. It doesn't matter, just the English differs, but the concept is the same. I am going to be looking for this kind of structure. Now, this for the uptrend, right? So remember, on our first time frame, let's say we began from the daily time frame. We had structure. And on our next time frame, which was our 1 hour, we looked at a point of interest or the order block. We looked for a point of interest. And we say that the point of interest should be below the 50% level of that whole move upwards, right? Then on our entry time frame, which was our 5 minutes, sorry, I beg your pardon, it should be the 15 minutes. It should be the 15 minutes because we skip a time frame lower. So 5 minutes would have over-refined and you can actually easily miss the trade. So I shall take the 15 minutes because it will be much more sensible to relate with the 1 hour time frame, and that's how I do it. We are going to look for our entry or confirmation, entry confirmation, right? Now this is our trading plan. On our daily time frame, we look for the structure, the 1 hour, the point of interest below the 50% level for the swing level leg that broke the structure. Then on the 15-minute time frame, we are going to be looking for our entry confirmation. So having looked at this, let's look at the bearish example, and I'm going to choose different colors to try and illustrate it more for the bearish example. So let's say where price was moving downwards and we found price at this level over here. So let's start with red. And let me make this a bit more solid, like that. Now this is our daily time frame. So I'll skip a time frame lower after seeing this break of structure over here, because price broke at this level over here. That is my break of structure. So I'll get rid of this as well. This is my break of structure. And we said we also want to see that price has formed a fractal low over here. So I'll go down to my next time frame, which will preferably be my 1 hour time frame. So in my 1 hour time frame, on price, I'm going to look for a point of interest where I want price to come back to, right? So if I have a point of interest, let's say an order block, that's what we're going to focus on, the order block. So we have our order block somewhere around here. That's our order block on the 1 hour time frame. Now on the 1 hour, let's use the orange. That's my 1 hour order block. And then when price comes to this order block, and then let's use, I think, blue for the entry part. What I want price to do is I want price to form this kind of pattern. So we use blue and reduce the font on this. I want price to form this kind of pattern. Then I will take my sell on this exact level with my stop loss at that level right over there. So we will be able to take the sell to the downside. So the same trade plan, market structure, and in the 1 hour you're looking for a point of interest, and in the 15 minutes we are looking for an entry confirmation. So basically that's the whole strategy, and that's all you need to know. You need to know market structure, the videos, you can check them out. Then the 1 hour, the point of interest, and order block. If price is moving upside, you're going to look for that last up close candle before price actually went downwards, right? And you have to make sure that on your left hand side, we actually broke structure. Then you put your level tools for the premium and discount. You make sure that if you're going to sell, price has come back above the 50% level, and if you're going to buy, price has come back to that order block below the 50% level. And our entry time frame will be a change of character or smart money reversal thingy. It's the same thing, right? And I've shown you the pattern time and again. The videos are all in the channel. So until next time, I am Emma Trades.